About KPIT's warning that they've issued. Rahul, hi, good morning. Good to have you on the show. Rahul, tell me, how is it that you are analyzing KPIT's warning? Does it seem like a specific execution issue? Does it seem like a pass-through of the European OEM weakness? Where would you pinpoint this?
Yeah, hi, good morning. Thank you for having me. So basically, in their Q4 call also, they have highlighted that there are two SDV programs that they were doing. We're seeing some conclusion, which was unexpected for them. And despite having a very strong win in the deal win side, it would be difficult for those wins to translate and cover up for the fall they are seeing in these two deal that they were working on. So as a result, it looks like Q1 becomes challenging, and they have also highlighted that things might turn only better in the second half of the year. So that is where they are. It looks like based we do this maths, it looks like they are not going to see a positive year in FY27.
That reminds Rahul, do you believe they can hold the FY27 EBITDA guidance of 20.5 to 21.25% by any chance?
The thing is that, of course, growth could be a challenge to the profitability in general. So that is always a sign to worry about. The only supporting factor nowadays is the currency, which is at least accretive. So if there is some cost thing that they could deal with and the currency continues to stay where it is, the profitability can be in a closer band, what they are indicating. But yes, if it's a declining year, sustaining that profitability will also be a challenge.
Rahul, hi, morning. How do you see this having an impact for other er&d as well? BMW had a nearly 12% of revenues for KPIT. Tata Tech also has a JV with BMW where around 4% of revenues come in from. And other er&d companies as well?
We have seen in the past also that there has been some disparity in terms of when KPIT is doing good while other might not be doing that well. And the other way around is also possible. I would not extrapolate this into a broader er&d space, but yes, there are certain OEMs which are not doing good. They are talking about their profit warnings and all that. So there could be a program which could bother a lot of other vendors for them, and they could be on the IT services side also, and also on the er&d side. So I would not directly correlate, but yes, it is a painful situation where a lot of companies might see the impact of it gradually.
But Rahul, tell me, how is the street going to read into this H2 FY27 recovery and Q4 sequential growth call? Do you think the markets would be taking it with a pinch of salt for a stock which has already fallen about 44% in the last 6 months, 46% in the last 1 year, and add to that the environment around IT right now?
Yeah, so I agree that it is difficult to believe that things could turn pretty fast. The only supporting argument is the $349 million kind of a deal that they have, which is supporting that there is new wins also. It's more about how the current transition in few accounts and versus what more you could get from the newer clients. Last year beginning, they have also started talking about how they could enter the China market. They've spent some time. They've got one logo as well. So if they do well in the Chinese market with Chinese OEM, that is one piece of the puzzle which is doing well. And if that clicks, then there is a good possibility that they could end well on an exit basis.
Rahul, I wonder, what does this do to your estimates? Hi, this is Harsha. What does this do to your estimates in terms of FY27? You said they won't be able to achieve 4% plus in terms of growth guidance, which they have provided for FY27, constant currency in dollar terms. But but how much, therefore, are you penciling in terms of the impact?
Yeah, we don't have FY27 outlook to be precise, but basis what is our assessment, I think there is at least 7-8% up to the number that we were building earlier. So that's a meaningful change in estimates. This is what we are anticipating at this point, and we would look forward to their commentary that how things are progressing, how was the deal win, and how are the non-pain part doing in the commentary in the June call. But at this point, it could be 7%.
Makes sense. Rahul, thank you so much for your time today and, joining in with that take and insight on KPIT and what it could mean for the, for the allied space as well. Good speaking with you.
Thank you.